Hello, everybody, and welcome to Schwab Coaching. Our next topic is advanced charting. I'm your host, Lee Bohl, one of the education coaches here at Schwab, joined today in the chat by James Boyd, hereinafter referred to as JB. He'll be answering questions I can't get to. Let me ask you a question. Have you ever heard of Elliot Wave? Do you know anything about it? Well, we're going to give you an introduction in today's course. So before we can get to all that good stuff, though, just a few logistical items. Send in your questions in the chat. And also keep in mind that everything we are going to be doing today should be considered as educational and informational in nature only. Nothing should be construed as a personalized trading recommendation. We're going to be using a technical analysis system today, the Elliot Wave, but keep in mind that Schwab certainly does not recommend the use of technical analysis as your sole method of investment research. If you are using our paper money software, keep in mind that results in paper money do not always translate to real-time trading due to changing market conditions. And our examples today will not include the effect of commissions or taxes. And finally, investing does involve risks, including loss of principal. All right, so we're going to start off with a blank slate here. The first thing we need to know is a lot of Elliott Wave is based on Fibonacci mathematics. Okay, so I'm going to put up something here on this screen. All right, this is what's called the Fibonacci series. It is, you start at 0, next number is 1. From now on, you add the next number to the previous one to get the next one. So 1 and 0 is 1, 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, 5 and 3 is 8, etc. All right, now, what is interesting, we can't go all over Fibonacci and Fibonacci retracements and everything, but one thing we do want to know is the ratio between some of those numbers come out to be these. Let me put that on a different line. All right, so these are typical retracement levels that you probably see on many Fibonacci tools, the 23.6% retracement level, the 38.2%, the 50%, and the 61.8%. There's other ones as well, but these are the main ones. So that's what we're going to be using today. All right, so what is the theory behind Elliott Wave? It's based on the observations of 35 years of market history up to about 1935 or 6 by Ralph Elliott. And Ralph Elliott came to the conclusion that the market seems to go in waves. I mean, you go up and then you pull back, you go up and you pull back. He found, though, in his study that there were certain forms to these waves. Okay, so I'm going to go to a different screen here. And we are going to go over a few points. So the first one is this. One complete cycle is considered to be 8 waves. And I'm going to show you that here. All right, so one complete cycle is 8 waves. What does that look like? This would be a typical 8-wave cycle. All right. So in going with the trend, we call this an impulse wave because it is trying to go with the current flow. So you're impulsing. And impulse waves, according to Ralph Elliott, okay, have 5 waves within them. 1, is a motive wave, 2 is a corrective wave, 3 is another motive wave, 4 is a corrective wave, and 5. So that is 5. Then, and we generally label those with numbers. And then if there are corrective waves, again, the regular corrective cycle is 3 waves, and we call that A, B, and C. So an entire cycle then is 8 waves. Now, that is the main thing. 5 and 3. We call this a 5. We call this a 3. Okay, and I'm going to go over that. Now, what happens though is within, so we call this particular, this would be this impulsive wave, we would call a wave of a certain degree. Degree means size. All right, so this would be, let's say, degree 1. Within here, though, this is a motive wave, number 3, and Elliot said that that can be divided into 5. And that would be like this: 1, 3, 4, 5. All right. This would be considered a wave of the next degree lower. Okay. So you can subdivide things in different waves, and there can be different degrees of waves. Okay. Now, the next thing to know is this is right, this whole wave here is a corrective wave. When you have a corrective wave going in the direction of the overall correction. So you can see A is going the same way as the correction, right? B is going in the opposite direction of the correction. So A waves, if they can also, since that's a motive wave in the correction, this can be divided into 5. And this could be divided into 3. And this could be divided into 5. Okay. So there's different degrees. So these would be 1 degree less than this degree. Okay. So you need to know that the idea of a degree, and you need to know that even motive waves can be divided also into 5. Okay. Now let's go and talk about another couple of things we need to know. So we said 1 complete cycle is 8 waves. I just did that one again. I don't know why. I didn't copy here. Here we go. All right. And then the next thing we need to know is, as we said, the 5-way motive phase, we call that a 5. And the 3-way corrective phase, ABC, we call that a 3. As we just saw, motive waves, even if they're part of a larger degree, they can divide into 5 when going in the same direction of the wave of 1 greater degree. Okay. And as we saw, also, if you were going against the trend of 1 greater degree, reactionary waves divide into 3. And I showed you that on the ABC. When the B wave, which is going in opposite direction of the general corrective wave, that might divide into 3, where the A and C waves, which are going in the same direction of the correction, would divide into 5. Okay. These are rules that we employ when we're trying to do wave counts. The next one is wave 4 cannot overlap wave 1 and wave 3 in the motive sequence of 1, 3, and 5. 3 typically, and there's a couple of exceptions, but typically 3 can't be the shortest wave. All right. So we're gonna take a look now. I'm gonna go back to my other drawing here, and I'm going to ask you a question. See if you are paying attention. Okay. Let's look at wave A. All right. Is it correct the way it's drawn? It's got 1, 2, 3, 4, 5. It's motive. It has corrective waves. Is that a proper wave count? I'll give you the answer. It's no. Why? Remember, wave 4 cannot overlap wave 1. Where did wave 4 go? Into wave 1. Okay, so this is no. All right. How about B? Okay, is B a correct wave? No. Why? Because 3 has to be, it can't be the shortest wave. And in this, it is. So the correct way that an Elliotician would draw this, they would say all this is wave 1 with a little bit of a correction, could have 3 in there. And this is 2 and this is 3. So what that does is, it'd be correct, especially if this pulls back and 4 here does not go into wave 1. Okay, so it can't be the shortest. All right. So what we need to add to here is also sometimes you can have what are called extensions, okay, where one wave just seems to keep going. And typically it is one of the motive waves. If you're going to have an extension, it's going to be generally in either 1, 3, or 5, typically in wave 3 and wave 5. And we'll add 2 more rules. Oops, sorry about that. And the last set of rules we'll add in here. All right. Is again, wave 3 also has to go beyond wave 1. It can't, is often the longest. So we had a question of what wave is sometimes the best to trade. Well, if 3 is often the longest, maybe that's the one. If 5 is not having an extension, that 3 could be one of the better ones to trade because it tends to be the longest often. Okay, and it's certainly not the shortest. All right. All right. And then finally, if you're going to have an extension, you only have it in one wave. And if 1 and 3 are the equal length, typically, all right, it's wave 5 that might have the extension. All right. All right. So with that said, let's go over to the platform here. And this is the NDX. I'm just going to show you how some people might start a wave count, but then we are going to go and look at the SPX in the grand cycle of what's going on. Okay. What we need to know also, all right, is I'm going to go back to my Word document and we're going to add the last feature. Once you start doing a wave count, okay, you must pick an obvious starting point, and it should be obvious. Okay. All right. So we go here to the NDX. You can kind of see here, if I just take my little cursor here, we'll just use this. So get a trend line. All right. So you might say that this is, right? Maybe this is, come on. All right. This is going to be in here. This might be wave 1. This could be wave 2. This could be wave 3. Why? Because it'd be longer than wave 1. This would be wave 4, and this would be wave 5. And then now you can see the ABC pattern, right? Okay. This is 1. This is the A, this is the B, and this is the C. Okay, so that is the corrective wave. Now, okay, let us go and see on the bigger picture on the S&P 500. So I'm going to pull up a chart now where I have done a wave count. Again, Elliott waves are kind of subjective. So if you're doing it, it could be a little bit different than the way I'm doing it. But let's take a look at the S&P longer term, all right, and see if we can figure out what's going on. Right now, I will say that we are at a very interesting both point in time and point in wave at the moment. And we're going to see why that is. All right, so I'm going to change my layout here, and we're going to pull up the S&P 500 with a total wave count on it. All right. Okay, so we have to start with the big picture. What did one of our rules say? We have to find a starting point to start a wave count, right? That's the first important thing. Where might you start over the last few years? What is a big, clear low? It is the COVID low, isn't it? Right? All right. So that's where we're going to start. So what is the biggest degree wave here? Okay. Are we doing? So the biggest degree is orange. All right. So this is wave one. Excuse me. The biggest degree is the impulse wave, which is the blue one. Okay. And I've got that labeled as wave number one. This is the big wave number one. Okay. Here is wave number two. Notice it's a corrective wave. So you have the A, B, C pattern in there. Okay. And then this is wave number three on the big time frame. All right. Now, there was a question, is there anything that can draw these waves for you? Not necessarily, but I'm going to take one indicator off this chart and put it back on. It is something that can help you a little bit. All right. So I'm going to go here and I'm going to edit my studies, and I'm going to take off this called the Elliott oscillator. All right. Now, the Elliott oscillator can help you sometimes figure out where the waves start and end. It's not infallible, but it is a pre-built study on Thinkorswim. All right. So what we're going to do is we're going to get a little beaker and we're going to just put in Elliott. All right. And then we are going to go to the Elliott oscillator. What is the Elliott oscillator? Consider it almost like a MACD. It's using two moving averages, a 5 and a 35 period moving average, to try to show you dips in waves. So you can see it also picked up for us, right? The big starting point. Okay. Now, within the huge degree one wave, which I have labeled number one here, all right, it's a motive wave. So we can get a 5-wave sequence in there, which is the orange one. And you can see how the Elliott oscillator might help you try to time those, right? So let us look at the next level degree down. So here is one. Why did I call that one? Because this is where we started dropping down from the high point. And this gives you the corrective wave. So maybe you would call that A, right? Then we have a rally up. There's your B, and then another drop, which is the C. All right. So it can give you some guidance. Now, the documentation says that if it is a long time or it makes a new high, one or the other, either by time or by height, okay, it is often showing you wave three. And that's true on the orange here, isn't it? Look at how long we've had the green with only a little minor dip. And that corresponds to wave 3 of the degree down from the blue wave, right? And then you can see how the Elliott oscillator kind of timed for you wave 4, right? Okay. And then finally, we have wave 5 of that 5-wave sequence, all right, peaked right here at the top of this one. And then we started having the correction. So here is the correction. There's wave. Remember, now we are looking at wave 2 in the biggest time frame, which is this blue line. It's a motive wave, so you can divide it. You should be able to divide it into 5 portions, right? And the Elliott oscillator helps us with that. So here is 1. We see the dip. Here's up. That's the 2. All right. Here's a dip. That's 3. Here's a move up. That's 4. And here is the move down, which is 5. Okay. This is the B. Now, you could theoretically, okay, trade. You could find a 3 in here perhaps. But if we zoom in here, oops. Yeah, wait a minute. I got to reset it. All right. There we go. All right. So again, B is this is the top of wave B. This is C. So C is a wave in the direction of the correction. So we should be able to divide it into 5. Okay. And we can. And you can see how the Elliott oscillator helped us with that, right? Here was the top of wave B, right? And then here's 1 at the bottom here. 2 is when it goes a little bit. 3, notice it is the biggest drop in here. 3, remember we said either by time or amplitude, all right, that this could show you wave 3, and it does. This is wave 3 from here down to here, all right? And then wave 4 and then wave 5 is there. All right. The next thing I want to show you, I'm going to reset this. Why did I show you those Fibonacci sequence numbers? Because another way that you can take a look, okay, to see where something might correct to is to add a Fibonacci retracement. Let's take a look, number 1, okay, let's take a look at the wave of the largest degree. We started at the COVID bottom. Right now, we're currently in wave 3, but we're going to talk about that in a second, okay? What I want to point out is let us see where this correction ended up, because you're going to see why I have this square here in a second, okay? So what we're going to do is we are going to get our Fibonacci retracement tool. All right, we're going to see where the bottom of the corrective wave was in the massive first motive wave. Okay, so we're going to start here. We're going to go up to here, right in here, and look where the corrective wave ended up, right around the 61.8% level. Okay, so that is also confirming that this corrective wave was a pretty deep one, but it tells you about where it's going to stop. Now, it's never exactly there necessarily. So you want to add a little bit of space, on both sides. And that's why people sometimes put triangles around, not triangles. Let me show you what I mean. Sometimes you want to put a rectangle around a fib level when you're trying to project. Whoops. because it's an area. Okay. So you might start a little bit above the 61.8 and go a little bit below the 61.8, and that's where it pulled back to. Now, we can also see this in waves of lesser degree to try to, it's a way to check to see if your wave count might be correct. All right. So, for instance, let's take a look at the orange. Let's take a look at this first movement up, wave one as a subwave. Let's see where wave two corrected to. So we're going to go back to our Fibonacci retracement tool. And we see that makes sense. That was a 38.2% retracement. So that, the way I have that labeled is probably correct. Okay. So that adds to your suspicion that your wave count could be correct. All right. Now, how are we going to use this information? Where are we now? We are here in currently wave three of the biggest degree. Now, how can we use this information? Well, if we are wave three, it can't be the shortest wave, right? So let's see how big this wave is and add it and see if we reached it or not. All right, so we're going to duplicate that drawing and we're going to drag it over. And if we, I'm going to have to put some more time on this chart then. Hang on. All right, so this is the active drawing. Okay, wait a minute. Let me activate this again. All right, so this is, we could see that this particular move might have more to go, right? So that tells us that maybe this is not over yet on a longer term time frame. All right. So that's one way that we can use it. The second way, though, is where are we? So this is the largest degree. Where are we right now in the second degree, which is the orange line? Take this one off. All right. And we have a question. So if a wave bottom coincides with a fib level, there's a higher confidence of being a wave. That's correct. Okay. Yes. And Zink here is saying on a longer term time frame, it looks like the rally may have farther to go if three can't be the shortest wave. That's absolutely correct. Okay. But now, where are we here? So the question is, darn it. All right. The question is, are we entering wave four now? So does that mean that we are setting up for a correction? Yesterday, it started to feel that way, didn't it? Right? And the other thing I want to do here, good, now I can do it. So we might be starting wave four. We don't know for sure. If we are in a wave four, again, sometimes you have to recorrect if your count, if the market changes, you might have to change your count. But right now, it looks like we could be entering wave four on the second degree. And where might that go? This particular box is, I did a Fibonacci from here to here, and let's see where it is. All right, so let's go here to, okay, so you can see I have the box straddling the 38.2% level. So this is a potential zone, okay, that if we are entering wave 4, where the correction, if there is going to be one, could take us to. And if it is going to be correction, okay, we basically might suggest we might have a drawdown, but a rally before we get there. If this is the terminal part of that correction, we need, right? We need an ABC wave to get us down there. 1, 2, 3. All right. Now, the other thing that is very interesting is on this particular orange wave, okay, then is there a time basis to this? So there is something called the Fibonacci time series that sometimes can give you a heads up along with the Elliott oscillator when you might be moving into a corrective wave. Let me show you how that works. All right, so I'm going to try to, there we go. No, I don't know why it does that to me. Bear with me here. Okay, so there we go. So is this a particular time where wave 4 might start? Okay, perhaps. All right. What we do here is we add another tool that Thinkorswim gives us. It's a drawing. It is the Fibonacci time series. Okay, and all it does is it starts counting Fibonacci numbers from a point. So if I put that on there for 2 down here, all right, it's not actually lining up exactly right of here. Okay, so we aren't in a time frame necessarily where something might happen, but it is possible that the ABC correction could take until here, time-wise. Okay, so anyway, I thought he would show that. Sometimes it lines up pretty well, sometimes it doesn't. But it gives you a place where certain things, time-wise, might be able to happen. All right. So the question is, are we in wave 4 or not? Now, notice that we are certainly, right, in wave 3 of the orange. And how do we know that? Number one, the Elliott oscillator, 1, hit a high for the cycle in here, and 2, it's the longest, right? So this shows you that 3 is the longest, all right? And that's what we're looking for. So the question for everybody is, are we going to have a correction, or is this wave 3 going to keep going? And we would have to say this maybe isn't 4. We don't know yet. And that's the problem. But the longer term picture is suggesting that this rally could have perhaps farther to go on the big picture, but that doesn't mean we couldn't have a pretty good correction first. All right. All right, let me look at some questions. So is wave 4 bear or bull? Wave 4 in an impulse wave, okay, is bearish because it is retracing some of it, right? And you can see some of these retracements. Let's take a look at where wave 2 was, right? Versus, so the orange wave, 1, 2, 5, then here's 1 here, 2, 3. Let's see where 2 was. All right, so let's go and do our retracement there and see if that's, if it lines up, that'll make it a little bit more probable that that was the end of it there. So there you go. Yeah, so that was a correction. It's right here, right? Two ended right here, which is right at the 38.2% level. So that makes me feel that drawing is correct. So we have a question: how do you get the numbers and everything on the chart? It's a manual process. There, you can buy software programs there that try to do automatic web counts, but they vary in what they tell you. Okay, so in a bear market, would waves 1 through 5 be downtrending? Yes, it would be. It would be like this. Okay, so here is a corrective trade. So the long, if wave 3 keeps going, wave 4 could be a pretty good correction, right, of the bigger time frame. And that would be a motive wave like this, and that would divide into 5. And you can see it. This is the whole correction on the blue line of the biggest time frame, and you can see it's a motive wave because it's been going in the direction of the overall wave, and then within there, since that's the motive part, it's the impulse going down, it's a 5 wave. 1, 2, 3, 4, 5 here. Now you could look for a 1, 2, 3 here, and then we had again a 1, 2, 3, 4, 5 in here. No, that didn't work. I have this thing up here, right? Okay, so anyway, so yes, so in a bear market, which would be something like this, you should be able to find 5 waves. Okay, so again, what is the best wave to trade? Well, again, going on the main time frame, since 3 is often the longest, and 3 could be, part of a down wave, that would be the best way to go short for some people. And then in a bull market, wave 3 is sometimes the longest, so that could be the best wave to trade. Sometimes, if you think about it that way, you got the longest chance of it continuing. All right, so this is the question. What would confirm this if we took out probably the low from yesterday? That would probably put this into play. So it could be that we are setting up for a correction. Okay, what would be a trading example? Well, on the SPX, you could use a proxy or you could use a stock that is in the SPX. How do you know if wave 3 is done? Yeah, you don't know exactly. If this doesn't pull back like a Fibonacci amount, like 23.6 or something like that, you would just have to say it's a little bit of a glitch like this in a wave, and then you would change this. Okay, but if it pulls back by a Fibonacci amount, like 23.6, that would tell you that wave is probably over, and now you're in 4, and then you would wait to see if it can give you the 5 going in the right direction. All right. A trading example based on Elliott waves would be on the S&P. You had a 3-wave correction here, and you would look for some type of resistance. So maybe in here, you finished your 3-wave. You don't know necessarily if it is going to continue down, but if it takes out the last swing high, chances are that that might be the time to go long. Okay. All right. So that is an introduction to Elliott Wave. It is a manual process. It's quite subjective, but on the other hand, it can give you a little bit of heads up, perhaps like maybe we're getting here. Now, would the Elliott Wave be more applicable to indexes to mitigate individual stock events? Absolutely. And that's why when Ralph Elliott did all this, he did it on the Dow, actually. And other people have done it. It works, I think, in my experience, it works better on indices than individual stocks. Okay. So if you're trying to do it, think of the 8-wave pattern, put up the Elliott oscillator. It can give you a little bit of guidance. Use the Fibonacci's and, come up with an idea of what might happen. So an Elliottian right now would be very concerned if we take out yesterday's low, because that would seem to confirm, and this would be the first place, if it could pull back further, wave 4 could be deeper. It could go down to the 50% level, right? But this is the first place it could stop. All right. So thank you all for your kind attention. Thank you, James, for hanging out in the chat. And you want the cheat sheet? Yeah, I mean, you can look at the recording too. It'll be on there, but let me pull it up. All right. So one complete cycle is 8 waves. The 5-wave motive phase is called a 5. Okay. Corrective phase is called a 3. Motive waves divide into 5 when going in the same direction. All right. Of a wave of one larger time frame. Now you've seen that. And wave. So these are the, and this is a very big point here also. All right. So make sure you start at the right place. You can use the Elliott oscillator for that. All right. So thanks again, everybody, and take care.